You have spent months, maybe years, developing a mathematically proven trading edge. But if you are applying that edge to a $5,000 account, you are trapped under a hard glass ceiling. A 10% return for the month is an excellent performance, but taking home $500 doesn't change your life or your career. Proprietary trading firms like The5ers exist to remove that ceiling. They provide the capital leverage required to take the exact same strategy and scale the profits into real income without risking your own life savings. This comparison matrix lays out your two primary paths to funding in 2026, the 3-stage standard bootcamp and the 2-stage high-stakes program. Traders often look at the high-stakes option, see the accelerated scaling and the 80 to 100% profit split, and immediately sign up. They assume a faster track to a funded account is automatically the better choice. Selecting an evaluation purely based on the highest potential payout ignores the risk parameters required to get there. Approaching a prop firm challenge with a mindset anchored in greed leads directly to forced errors and blown accounts. The only reliable path to securing funded capital is matching the absolute mathematical constraints of a specific program to your actual empirical trading data. The standard bootcamp requires you to grind through 3 separate evaluation stages. To clear each stage, you have to hit a 6% profit target. Passing 3 stages means a slower, highly methodical climb. You will spend significantly more time proving your consistency on a demo before touching live capital. This timeline illustrates the advantage: 0 time limit and no daily loss limit. Your only boundary is a 6% overall loss. You can wait out volatile conditions for days to execute a single A+ setup, completely free from the pressure of a ticking clock. That absolute freedom introduces a distinct psychological trap. Without the pressure of a deadline or a daily limit, traders often slip into complacency. They either trade too passively and miss prime entries, or they suddenly over-risk out of boredom to speed the process up. Built for the steady compounder, if you hold positions for days, operate with a high reward-to-risk ratio, and have deep discipline but limited screen time, this is your environment. You are explicitly trading speed and instant gratification for a massive, highly forgiving risk buffer that lets your edge play out over time. The high-stakes program demands you pass only 2 stages, hitting an 8% and 5% target, and rewards you with a starting profit split of 80% that can scale up to 100%. The intent behind the structure is straightforward: provide hyper-accelerated access to heavily leveraged capital and fast, immediate payouts. This chart reveals the toll for speed. Crossing the strict 5% daily loss limit instantly terminates your account. Therefore, surviving consecutive daily losses forces a drastic reduction in your per-trade position sizing to a mere fraction of a percent. Unlike the standard program, where you manage the health of your entire account as one unit, high stakes forces you to manage strict, isolated daily risk budgets. Taking a morning loss and immediately revenge trading to make it back by the afternoon is the fastest possible way to hit that daily limit and fail the evaluation. This requires the profile of an aggressive intraday scalper. You must thrive under pressure and execute your daily stop-loss rules with robotic, non-negotiable precision. High stakes operates within an unforgiving mathematical environment that destroys any trader who refuses to shrink their per-trade risk. Neither of these programs is objectively superior to the other. Passing depends entirely on choosing the rule set that accommodates the habits you already have. To find your match, look at this flowchart and ask the primary question: what is your actual trading frequency? If you have a low trading frequency, holding trades overnight and enduring drawdowns spanning multiple days, you require the standard route. If you execute high-frequency intraday trades, you reach a critical checkpoint. Can you flawlessly adhere to strict daily limits? If yes, you have the discipline for high stakes. If no, choosing high stakes leads to a dead end. Your final step before purchasing an evaluation is to open your trading journal and locate your absolute worst historical losing streak. Run the math on that exact streak. Calculate whether taking those specific trades would have violated a 5% daily limit, or if they would have safely stayed within a 6% overall limit over time. Brutal honesty about your own metrics is the only way to pass a prop firm evaluation. Optimism about your potential will only cost you the entry fee. Selecting the right evaluation gets you funded, but keeping that capital requires executing your strategy flawlessly in the live market. Whether trading the marathon or the sprint, poor execution speeds and slippage quickly eat through tight risk margins, pulling you into drawdown. You need a broker for precision. FXNX offers 0 pip raw spreads and is fully MISA regulated, providing the optimal environment for execution. By utilizing FXNX's MT5 infrastructure, you ensure your stops are hit precisely when intended, eliminating the execution lag that derails tight risk management. Analyze your journal, choose the path that fits your constraints, and click the link in the description to open your FXNX account so you can execute your edge without hesitation.